Gerri Harrison here from Gerri Harrison Financial Services, here with your financial tip of the week. Have you done your Roth conversion yet? Special rules exist for the 2010 year regarding Roth conversions that make it a very attractive choice. First, there is no longer a $100,000 adjusted gross income limitation for doing a Roth conversion. You can now do a Roth conversion regardless of what your income level is. This is huge for those individuals who are unable to make Roth IRA contributions because they are over the income limits. If your traditional IRA is lower because of the past stock market drops, it is an ideal time to convert before the value rises. The advantage of a Roth IRA over a traditional IRA is that all the growth is tax-free if you meet the rules. For example, if you have a traditional IRA worth $50,000 today and you convert it, you will pay $16,000 in taxes, assuming you're in the 25% federal and 7% New York State tax brackets. If that $50,000 then grows to $125,000, you will not pay any tax on any of that $75,000 growth. If you stay in the same 25% tax bracket, you would pay $40,000 in taxes on an account valued at $125,000. And I have to ask, what do you think the chances are that tax rates are going to stay as low as they are right now based on the current government spending? If you are unemployed or underemployed, your own tax rate may be lower than normal because of less income. If you cannot afford to pay the tax on converting 100% of your traditional IRA, consider converting part of it. The $100,000 limit has permanently gone away, so you can wait and convert later, but as the account value grows, you will pay higher taxes on the conversion. The real advantage of doing a Roth conversion during 2010 is that there is a special ruling if you convert your traditional IRA during the 2010 tax year, you will pay 1/2 of the tax when you file your 2011 tax return and 1/2 of the tax when you file your 2012 tax return. Normally, when you do a Roth conversion, you would have to pay all the tax on the current year's tax return. This special ruling gives you time to accumulate the money to pay the taxes. What if you do not have a traditional IRA? If you have 401ks or 403bs with previous employers, you probably have the ability to convert these to Roth IRAs. Not sure if a Roth IRA conversion is for you? Make an appointment and come in and see us. Gerri Harrison Financial Services can calculate what the tax would be if you did a Roth conversion and explain to you the pros and cons of doing a Roth conversion. Call 729-4144 and make your appointment today.